Today to reduce our taxes. He's the author of a new book called Detaxification for the Tax Sick. Would you please welcome noted entrepreneur and expert in the tax field, Mr. Dan White.
Good. So, ladies and gentlemen, welcome. Glad that you're here. Today's topic is on taxes, and I'm not going to ask you to do anything illegal, immoral, or otherwise. All I'm going to suggest to you is that you should pay a lot less in taxes. And just to give you a bit of a background, I've been teaching taxes for the past 9 years. I work with people in terms of reducing the amount of income tax they pay. Also encourage people to refile for the past 3 years. Some people have received as much as $30,000 back in refiles because the average Canadian pays far too much in income tax. So that's what we're here today to discuss that whole topic, what it's all about. So what we're going to cover in this seminar, we're going to cover what's involved in the process of reducing your taxes. I'm going to debate you with just how much you can save in taxes. Then we're going to talk about the tax department, because there's a lot of misinformation and disinformation out there. Misinformation that has misled the Canadian population into paying far too much in income tax. I'm going to talk about the power of the income tax department, what they can do and what they can't do, and what your rights are. And in so doing, I will demystify the tax department, remove the fear of the tax department, because that's a major fear in a lot of people's lives, so that you're not afraid to take the tax deductions that are legally yours. So that's what it's going to be about. I will share with you the process. How do you do it? We'll talk about setting up a business, how you should be set up. We'll talk about incorporation. And we will talk about the things that you can write off, and little rules of thumb that makes life a lot easier when it comes to this whole topic of income tax. So let's start off with what is the most important thing that every Canadian should start to think about. What every Canadian, and as far as that goes, every North American should be thinking about is how to utilize control. Control through being a business. If you have a corporation, that means you have a corporation. It doesn't mean that you personally are not a business. And you're going to have to establish a relationship with you, the business, and with your company, the business. And it starts to begin with a number of factors to be concerned with. You have to be a business. You only file one tax return. If you file two tax returns besides a corporate return, that means you're paying too much in income tax. File one tax return as a business with a social insurance number. That's the way you do it. Tax department may not like it, but they do not have a choice. They have to accept it. So let's just take a step back. The collecting of tax throughout history has been like the plucking feathers from a goose. The tax department historically plucks the feathers from the geese who hiss the least. And the Canadian taxpayer has been the goose who's been plucked to the largest extent of any single source of tax, to the point where the average taxpayer pays the bulk of the money that goes to Revenue Canada. The single largest source of income for the tax department is the salaried taxpayer, middle income taxpayer who can afford it the least. So I'm going to recommend you take control of that situation. I'm going to recommend that you implement a process of tax savings, that you invest in a personal business for yourself or your existing personal business to the point where you make so much money you can afford to pay taxes. You've got to get over the hump of survival. And we also have to recognize that governments historically have never wanted their population to be well off. Sometimes when a government goofs up and lets the population become well off, you have this unique situation as occurred in Hong Kong, where in Hong Kong they didn't tax the free flow of capital at a lower rate of taxation. The people became educated, wealthy, and powerful. And what did they do when they didn't like what was happening? Well, they just packed their bags and came to Canada. That's not the best thing. The country does not need to lose their educated, wealthy citizens. Not the wealthy part's not so bad. It's losing their citizens is what they don't want to do. So Hong Kong was the exception. Canada is not an exception. It would be rather bizarre to suggest that somehow or other our government wants us to be well off. There is absolutely nothing to support that. If there was any evidence to support us being well off, they wouldn't scam us with our RSPs. They wouldn't scam us with the newest edition of rip-off, which is the Registered Educational Trust Fund. Hey, the RSPs worked so well, let's suck the Canadians in on a new one. And I consider these things borderline fraudulent. And the reason I say that they're both fraudulent is, in this country, when you make a deal with somebody, a deal is a deal. And if one party breaks the deal or changes it, you go to court and you get restitution. But the Canadians entered into a deal with the government on the RRSPs. The government changed the rules. And the government misrepresented the information. Government said, put your money into an RRSP at a high tax rate and take it out at a low tax rate. Translation, the government said, plan to retire poor. In other words, retire making less money than you're making now. If this was a private enterprise deal and the government was intervening, trying to protect us, they would be saying, like they do with the securities dealers, know your client. And make sure that your client knows the pitfalls. Make sure that the client understands that you might, in this situation, pay 2, 3, 4, 5, 10 times as much tax because you used an RRSP. Let me give you a very specific. The average Canadian does not expect to pay more tax because they used an RRSP. I would suggest, and I'm not afraid to go on record as saying that, Canadians do not believe they will be penalized. Take this situation. Somebody who, throughout their working career, doesn't get richer, doesn't get poorer, just maintains status quo. For 20 years, at $20,000, they can put approximately $3,600 into an RRSP. And the tax department says, hey, you're better off because you're saving on income taxes. Well, are you really better off? You put $3,600 into an RRSP over 20 years, and you save a little less than $1,000 a year in income tax. Bottom line, you're $2,700 poorer in your pocket because you've invested your money. So for 20 years, you have $2,700 less spending money. Easy math, $1,000 a year for 20 years is $20,000. If you got a very meager tax return, you would have a 6% return on your investment, which means after 20 years, you would have $150,000 in your RSP. Simple math on denial. It's a fact that Canadians, people around the world, run into emergencies, and they need their money. A loved one is dying. Something has come up. They need to take their money out of their RRSP. Well, if they removed $150,000 from their RRSP, they would pay 53% income tax on that, plus some other expenses that go with it. So now let me see. They save $20,000 in taxes, and they pay 53%. So in other words, they're going to pay about $76,000 in tax when they only saved $20,000. I suggest that if it's not fraudulent, it sure as hell is misleading and unfair. That's a symptom of the government. Now let's take another thing when we're talking about the government. How do we feel about them in taxes? Did we or did we not, as Canadians, pay into the Canada Pension Plan for years and years and years? Well, I believe we did. And I believe it's further a fact that the government spent our pension plan, borrowed it, as I said, which was not in the contract. We didn't say we're paying into a fund to loan the government so that if we happen to get paid back, we've got it. Because bottom line, if the government spends our money, how do they replace it? Their single largest source of income is income tax. So of course, they have to tax us back to replace it. So now they taxed us, pension plan, they spent it. They taxed us to replace what they spent, and now they're taxing us so that we can have a pension plan. However, if we maintain a modest income, they'll claw it back, so we don't get it. So this makes an awful lot of sense. Makes me feel warm and peachy for our government. The fact that they'll tax us, spend us, tax it, put it back, tax us, not give it to us. That's how the tax system works. That's kind of trying to keep us poor. Take another fact. The government, under the laws of this country, the Banking Act of Canada says the government has the right to print money. Now, they don't indiscriminately print money because of that magic catch-all word, inflationary. The people that bandy the term inflationary usually don't understand economics, so they wouldn't say something that dumb. Consider the fact the government has the right to print money. What if they just printed the money to replace what they spent? You'll have to help me with how that's inflationary. How would it be inflationary if they replaced the money into the fund that they spent? And if they wanted us to be better off, then they would allow us to collect it when we retire. But the government games has always been print the money, give it to the population, take it back. That's how taxation works. So I could go on at length about things that the government does to keep us poor. However, let's move right along and say that the reason I don't take the position of don't pay tax at all is because we have to pay income tax. We do have to pave our roads, and we shouldn't be charging our children for an education. That's another topic that bugs me. We do have to have hospitals, should be funded, and we do need to have a police force and the things that go along with that. So even though income tax was a War Measures Act, even though it isn't a legal tax, because that I don't appreciate the fact that we have a tax that is not a legal tax that we are paying. I just wish that it would be properly structured so that we would feel a lot better about paying the tax. I won't help anybody de-tax themselves in terms of not paying any income tax, because frankly we have to pay tax. Also, you need deep pockets to fight this battle with the tax department. And not one that's a healthy enterprise to go after. Never pick over the bee's nest. Just what you need to know is if you want to get honey out of the bee's hive, hold your breath, and you can go and take the honey. Because it's not your body that the bees go after, it's the breath. So if you buy bees, hold your breath, separate seminar. Okay, so about taxes, it's fair to say that the tax department takes a lot of taxes, and it's fair to say that it's very difficult to get ahead unless we learn to take control of our own lives. And we have to take control of our finances, which includes the taxes we pay. We have to take control of our health, and we have to take control of our intellectual minds. So that's what this is all about. So I'm going to cover now what it's like to be a tax reducer, and it involves having that concept that you're a walking, talking, breathing business. Everything you do has a business purpose to it. When you're having fun, you say, how is this a tax deduction? And a thinking process goes like this. Imagine you were General Motors. Just put your General Motors cap on, and you would say, if General Motors had an expense, nobody would deny they're a business, and it would be a tax deduction. So there's nothing different about being a small business and putting on your GM hat. The question comes, how do I write this off? Always having that idea. With the tax department, they largely respect the great God paper. If it's on paper, then it's reality. Then it's real. So the tax department will ask people, and what if a question should come up about their business, about their deductions, they will ask, do you have a business plan? So I consider a business plan is like an insurance policy. It's an insurance policy that will ensure you get to keep your tax deductions. It's a way of thinking. It's a way of saying, if I'm going to have fun, I might as well be able to do it for business purposes and write it off. Let's just take the consideration of myself. I used to be a Toastmaster for 12 years. Never missed a Toastmaster meeting every week. I spoke and I spoke and I spoke for fun. And then I decided, well, why don't I just make my hobby my living? which legitimized all my Toastmaster expenses. With the side benefit, of course, is what you have to be thinking about, is you've got to make a profit. You have to correct that, make that precise, you have to have a reasonable expectation of having a profit. You don't ever have to collect any money to be a business. The tax department is not consistent in the information that they give out. I have personally experienced situations where I have phoned the tax department and spoken to different tax officers, asked them the identical word-for-word question, and got different answers every time I called. I've also, in the old days, in Stone Age, you used to be able to hook up your computer to Revenue Canada's databanks at 300 baht and download questions and answers, which I spent night after night, day after day, downloading questions and answers, until I learned how the tax department handles questions and answers and how they think. This is how the tax department thinks. If you're not making a profit, you're not a business. If it's fun, you can't write it off. If it's deductible, no, it's not unless. The Income Tax Act is written by lawyers to keep lawyers employed. And when there's a dispute, the lawyers represent the Income Tax Act to a judge who's an ex-lawyer. But they don't speak legal gobbledygook, they speak English. So just think about that for a second. Lawyers interpret legal gobbledygook to the language of the country so that it can be decided what's right. I wonder why they don't just rewrite the Tax Act in English. I wonder why they don't have a flat tax. I wonder why they describe multitudes of situations where something is not taxable. I'll give you a specific example of what I'm talking about. When the dreaded GST came out, I was hired by a firm to find out what the application or the implication, the effect, and the affect on the ice cream business would be regarding GST. And specifically, they were interested in ice cream novelties. Now, wouldn't you think that if ice cream novelties were taxable, it would say so? Do you know how much space in the Income Tax Act is devoted to describing when it is taxable? So I took the position with the tax department, and this went coast to coast to the highest tax officers in the country. I took the position that if ice cream novelties were taxable, it would say so. The fact that it doesn't say it's taxable, period, must mean there are situations where it's not. And I found where it's not. It's ice cream novelties under the following circumstances as outlined in the Income Tax Act. And I was confided by the tax department, it was the best argument they'd ever seen. I presented it in English. And then I would have the tax department read from the Tax Act, which is my right. And when they ran out of breath, I'd ask them why they paused. And they'd say to get a breath, and I said, you can't pause, you change the meaning, there's no comma there. Pause means comma. So take a big breath and read it the way it's written. Don't pause at a convenient place to change the meaning. So then, here's the sort of things I heard from the tax department. The intent of the law is that it's to be taxable. My response was, now we're getting somewhere. The intent. Could you please send me a copy of the intent so I can read it too? And they would respond, well, obviously the intent's not written down. Then I said, well, you're going to have to help me with this. You can't understand what's written down, but you understand the intent that's not. And then they would respond, well, the wisdom. Okay, good. Send me a copy of this wisdom so I can have the wisdom too. Well, obviously, wisdom's not written down. And I said, well, can we talk about the law then? And let's not talk about your interpretation and the wisdom and the intent of the law. Because frankly, you don't know the intent. You only know what's written in the Income Tax Act. You know what? They don't know how to deal with that. Simply because I was being straightforward, exercising my rights and saying, if it's taxable, I demand everybody pays it. And I'm behind the tax department 100% as to what's taxable. But don't tax us if it's not. And don't use baloney to convince us otherwise. Now, look at the Income Tax Act this way. They send out memorandums and circulars to us as to what the law is. That's what we think they're doing. That is not what they're doing. What they do is they interpret the Income Tax Act in their favor. And then they do a publication. Come on in. Just got some new guests. They do the, there's a spot for you right here. Welcome. They interpret the Income Tax Act in their favor. And it would be unreasonable for them not to do that. I don't have a problem with the tax department interpreting it in their favor. I have a problem with them representing it as the law. And in my dealings with the tax department, I will ask them, who printed this? And if they say the truth, which they do, they say, well, we did. So then I say, is it interpretation or is it law? And they say, well, it's interpretation. I say, okay, based on what I understand about that, that means that you have to follow it. But I don't. I have to follow what's written in the Income Tax Act. And as a matter of fact, I recommend everybody have a copy of the Income Tax Act. It's a really good document to have, and it is the Bible of what the tax is. Coming back to what we said about the lawyers and the judges and why there isn't a simple tax, the whole legal system would collapse. Like, can you imagine? You pay tax. It's 15%, period. Anything that you're entitled back, we'll send it to you in a check. How many lawyers are going to get employed about that? How many court cases is there going to be about the meaning? Everybody pays 15% tax on every cent that comes into their pocket, bank account, offshore, onshore, anywhere. And you know what? The average Canadian would support that. And it would go back to the old days, when if somebody said, I cheat on my taxes, everybody would go, boo hiss. And I can tell you from 9 years of teaching taxes, if somebody says, I'm a tax cheater, 99% of the people around them will want to know how to do it too. Because the tax department has lost the confidence of the Canadian taxpayer. It isn't there anymore. We no longer feel the tax system is fair. So now when the tax department is hiring by the hundreds people, tax auditors, to go after the underground economy, what they're in effect saying to these Canadians is, holy cow, there's a great big underground economy. We've got to stop it. And the rest of the world is, how do they do it? So the answer to get Canadians to pay tax is fairness. In this country, we have to willingly comply. It's a self-compliance system. And when they start jerking us around and losing our confidence, then we become less willing to pay our taxes. So what I'm saying is overcome that hurdle, be the business, and start paying taxes. So I'll come back to that. This bit about being a business. Often people are told by the tax department that you're not a business until you show a profit. Or here's the things you have to do to be a business. I've never heard it correctly described. And the other thing that you will want to do is say, why is there not, under the laws of this country, a clear legal description of what a business is? That's a very important question. Why is there not, under the laws of this country, a description? There's a weighing thing. And the weighing thing is great for the government because they can do misinformation and disinformation. Because if it was clear, Canadians would just go and check it all off and say, I passed the test 100%, that's it, I'm a business. But no, they say you have to have a reasonable expectation of making a profit. And that's critical. They say that you have to be doing the things that businesses do. You have to, they look at whether you have a GST license, a PST license, whether or not you offer your services for sale, who sets the hours of operation, whose offices do you deal with, how many accounts do you have, blah, 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 blah. All of the things that could be written down and saying, this is what you check off. It's like when you go to get your driver's license, they don't say, well, now let me see. How old are you? Yes, that's one thing. We'll consider that, but it depends. And they won't say, they won't say, well, how far do you drive, and have you taken a safety test? What type of insurance do you have? Let me see, are you a real driver or not? It's no. How old are you? Can you see? Do you need glasses? Do you have insurance? Etc. Bang. That's how you pass. It should be the same in everything. Tax department doesn't do that. Hobbledy gobbledy goobly gook, so nobody really knows they're a business. And it's really neat. They phone the tax department says, no, you're not. No, you can't. No, it's not deductible. You can't write it off. That's it. And so the average Canadian goes, well, what the heck is a business anyway? So a business is an entity that intends to make a profit, has a reasonable expectation of making a profit. And if they document that in a business plan, that supports it. And then, key thing is, if you set your own hours of operation, you're a business. I know of a company here in Toronto, a courier company, who had drivers who wore their uniforms, drove their trucks, there being the company's trucks, company uniforms, only delivered parcels for this one company. Only source of income was this one company. The tax department's position was, these are not independent contractors, even though there is a written contract, because they demonstrate the attributes of an employee. The company disagreed, appealed the process, went to court, and the tax department lost. And the reason the tax department lost is because these drivers set their own hours of operation. So if you want to be a contractor with a company and you want to be able to get the legal tax deductions, you put in your contract, I reserve the right to set my own hours of operation. That I will be cognizant of the hours that my employer of my services requires me. However, I will be setting my own hours. So if the person happens to need you from 9 to 5, let your client know that you will set your hours somewhere between 6 a.m. and 12 p.m. But you will be available as required. That's setting your own hours. So that's the sort of process that you want to go through. The business plan, it's critical. You've got to stress that. And a business plan, unlike one that is applied where you apply for a loan, a business plan for a loan is kind of a joke because numbers can be made to fudge anything you want. Who is going to sit down and do a business plan for a loan and put dumb numbers in? Everybody's going to put the numbers to represent a good picture. And if you're going for a loan, is it in your best interest to be honest and realistic if you know you want to impress a bank manager? And the other factor with business is like sending the shuttle to go around the moon or wherever it happens to be going on the current trend up in space to Mir. When that shuttle leaves the launching pad, it's out of control. Every step of the way is constant course correction, course correction, course correction. You don't just say, there's the moon, there's Mir, push the button, it goes. They're guiding it. It's under constant thrust, adjust, thrust, adjust. Business is just like that. Thrust, adjust, thrust, adjust. That business plan that you write, if you ever took a look and said, look at the average business plan, and then look at what happened a year later, 2 years later, 5 years later, you would probably find very little resemblance to the original plan. That's what business plans are like. I'm not saying don't have a business plan for business purposes. The contrary. So there's 3 business plans. One to protect your taxes, one to get a loan, and one, the real business plan that represents what you're going to do. And understand that all 3 will do a course correction. So for the tax department and you write a business plan, who you are, what you do, how you do it. Have a mission statement. Have a value statement, have a commitment statement, have a customer bill of rights, describe your strengths, your weaknesses, what your business is all about, and how you're going to make that all-important profit. Because the tax department will say, when they call you, do you have an expectation of making a profit? They will ask questions to build this up. They will ask if you have a business plan. And if they can unearth that you didn't have a reasonable expectation of making a profit, none of your tax deductions apply. You lose them all. Under the laws of this country, if you write a business plan and you lose money for 2 years, you can update your business plan and carry on losing money. I'm not saying don't take the attitude that you're doing this for tax savings. That's not correct. Do this to show how you're going to get your business on track to make a profit. There's legislation in this country called GAR, General Anti-Avoidance Regulations. And that law was written to prevent people from structuring themselves to reduce the tax they pay. So to rephrase that, the government believes it's illegal for you to position yourself in such a manner as to reduce the tax you pay. So if you want to be able to keep your tax deductions, then you have to do everything for business reasons. The answer is just figuring out how it's a business reason, because everything in life is for business. Even marriage is for business, if you want to think about that. I'm going to talk about your relationship with accountants and with lawyers. I believe accountants are necessary. I believe lawyers are necessary. But I believe you use common sense in the selection of hiring them and how you have your relationship with them. Many people know that if they hire an architect to build a house and an engineer and give that person a budget, gives that person a fixed expectation of what they want, and implement a quality control process, they will get a better house than if they built it themselves, and they will get it for less money. The same situation happens with accountants. Now, would you go to an architect and say, build me a 5,000 square foot house, I need to live? No, you wouldn't. You'd give them a spec. So what's the difference when we go to an accountant and say, cook my books? I mean, figuratively, jokingly speaking. Unfortunately, the average Canadian thinks that the accountant is somehow God, and that the accountant knows all the law. But the reality of it is that the accountant is in place to implement due course of law, due process of doing your books, and a good accountant, under the definition of good accountant by the population, is one who will make sure that their client gets every possible tax deduction that the tax department doesn't care about, that it's okay about. But they have no vested interest in being aggressive, because all it will do is backfire on them. It'll come back to haunt them. So one of the things to keep into perspective is I hear this statement so often, it drives me crazy. I've got a great tax accountant. Yeah, they're really good. And I say, how do you know? I get all the deductions possible. How do you know? Well, I just know. No, you don't. If you were in a position to be able to make a statement like I have a great accountant, you wouldn't need one. You don't know how to judge a good accountant unless you are one. And if you are one, you don't need one. So when you look at it, what you say is, I am a business. I'm not here to have you dispute that with me. These are my expenses. They're all business deductions. If you don't know how to write off my deductions, I will find an accountant who does. And then, if the accountant agrees with you, you're heading in the right direction. If you sit down with an accountant and they say, the most important thing is that you never get audited, pick up your stuff and walk out. You are just dealing with an extension of the tax department in the worst possible manner. They are there to intimidate you and scare you away from taking your legitimate deductions. That's a scary thing. Be afraid, David, of the tax department. They're going to come into your house in the middle of the night. They're going to grab your newborn. They're going to beat your wife into a pulp and laugh and giggle and run out the window. So be a good boy, David. That's the type of thing that's put forward. The tax department is not there to break the law. These scary, scary stories you hear about them doing these weird things, it's because the citizen didn't know their rights and how to protect them until they were already in trouble. The tax department cannot go into the bank and seize your bank account if you filed your notice of objection, if you filed your appeal, and a whole bunch of other stuff. That doesn't happen. As a matter of fact, the people who work in the tax department are just like you and I. Good people trying to make a living, and some people not so good. You find jerks anywhere you go, and the tax department is absolutely no exception. Do they intimidate people? Yes, they do. They get on a lot of them get on a power trip. There's lots of really good people. So, jumping back, I'm going to switch back and forth from being the business to the tax department, bringing it into focus. So, you're a business. You print a business cards. You print letterhead. You offer your services for sale. You go out and legitimately attempt to make a profit in business. You're a business. Do you have to register? The answer is absolutely not. Should you register your business? The answer is an emphatic probably not. There's no law that says you have to register your business. There is the Ontario Names Act, for instance, that says if you use a name for business other than your own, you have to register it. Okay, so you'd ask yourself, why would I need a name other than my own? Better be a good one, because as soon as you register for your business, you're going to pay the price. The price goes like this: the time it takes to go to 393 University Avenue or wherever your local registration office is. Pay your 80 bucks or 90, I think somebody said it's just gone up to. And now you get this nice piece of paper that says, you're a business. But the tax department doesn't accept you're a business, not unless you have a business plan and have a reasonable expectation of making a profit. So that piece of paper doesn't even mean you're a business. But what it does mean that if you want to open up a bank account today, you have to have a credit check at the bank. Why would you have to have a credit check to deposit money in a bank? The answer is the tax department knows what's going on. Because before, you could go in, phony ID, no ID, they still don't ask for ID, register your business under a phony name, put somebody else's social insurance number on so they can pay the tax. And by the way, the most protected number that in your life should be your social insurance number. Somebody uses your social insurance number, you pay the tax. And try and get out of it, it's not easy. So when somebody asks you for your social insurance number, and it's not an employer or a bank, you better seriously question why they need it. And especially companies like multi-level marketing companies, they will ask for the social insurance number, get it off the file. They have no right to ask that. And on a number of occasions, I've forced them to take that off the requirements. So be careful with your SIN number. Okay, now so you go to the bank, you go through the credit check, you get a bank account. And you have the wonderful privilege of paying 79 cents a page to deposit your money, when as an individual you can deposit it for free. And now you pay more to write a check, because you're a business. And now you pay more for your phone lines. And now you pay more for everything else, because God forbid that a poor tax Canadian citizen should make a profit. Let's just make sure they don't. It's this magic thing that happens when you become a business under that name, where you pay more for everything. There's nothing stopping you from using your name in business and having a personal checking account that you keep track of your business expenses from. And if you want to know what the best computerized bookkeeping system is, bar none, there's two of them. Lotus 123 and Excel. There's nothing better than that. You go to your accountant with a spreadsheet of your expenses, which is dirt simple to do, and they know exactly what to do with it. When you go to them with a variety of gazillion other software packages, they have to translate that. They may be able to download it, they may not be able to download it. But you're doing nothing for them. You're only creating work for yourself. So get away from the idea that if I have this magic program that'll take me a month to learn, get comfortable with, and enter all my information, and that somehow or other this is worth something. It doesn't cost very much to have a bookkeeper take envelopes full of receipts and do them. It's a modest charge, and if you are able to make money in your business, you would be able to ask yourself, can I make more money than I can hire a bookkeeper to keep my books? And if you can't, you better reevaluate your business, because accounting firms have it down to a science in terms of getting your books done quick, simple, and easy, and doing it right. They know what to do. Would like to say your relationship with your accountants. If you are paying less than $200 to have your tax return done, you're paying too much. So I'll say it again because that doesn't sound right. If you're paying less than $200 to have your tax return done, you're paying too much. The only reason you'd be paying less than that is because you're not being a business, or you're hiring somebody who has no vested interest in doing a good job for you. For 50 bucks, what do you expect to get? Do you really expect somebody to say, John, tell me now, what about your real estate? What about your investments? What about this? What about this? What about this? What about income splitting? And you say, well, what's income splitting? What about this? And they're there 4 hours later giving you a lesson on taxes. You expect that for 50 bucks? I mean, be serious. Now, one of the best, of the biggest quick and easy tax companies that are out there, and I don't want to spread bad names because it gets a lawsuit, but I can tell you what the inside sources in Revenue Canada say about these people. They're the absolute best of the worst. Great big company, they're the best of the worst. And you know, I don't blame them. I'm not taking a shot at them. I'm taking a shot at the misinformation, the disinformation that's put out there that makes them think it makes sense to go and pay 50 bucks for a tax return, or sometimes even less. How can you make money doing tax returns if you open your mouth and blurt out, do you have any other deductions? It's absurd. So take that concept and say, unless I'm prepared to get my feathers plucked, so there's nothing left of bare, sunburned skin, and that means I'm only going to be a salaried employee, and there's not much you can do as a salaried employee. Then fine, roll over, and do you need a tax accounting company to help you there? No, go and buy yourself a diddly squat program that doesn't mean anything, and do your taxes because you're getting hosed. That's just the system. You just give up and accept it. However, if you want to say, hey, I'm a business and I'm going to do things to make a profit, and as a result, I'm going to put thousands of dollars back in my pocket, now you're heading in the right direction. And if you go to that Mickey Mouse company and say, do you do real taxes? I'm prepared to pay you $250 to have my taxes done. What do I get for it? That's a heck of a lot better situation. Now you're starting to make sense. $250 is what you should pay to get your tax return done. There's other opportunities. You can have somebody teach you how to do your own taxes. So pay the $250 and say, I'll pay you an extra $200, teach me how to do it myself, so that I can just phone you up if I have any questions, and I'll pay you X amount of dollars per year if it's going to get on your nerves about the questions. Once you've learned how to do it, it's the same thing every year. But you should check with your accountant, because this is what I will tell you about accountants. Their business is to know what the tax changes are. That's what they're there for. Not there to do your bookkeeping, but they can. Utilize the surface well, but remember there's no client confidentiality with an accountant. They are required by law to tell the tax department everything they know about you. If they don't tell on you, they're breaking the law. So for crying out loud, if you've made a mistake, don't go to your accountant and say, geez, I think I blew it. Don't tell them. Keep it a secret. If you need legal advice on a situation where you're in trouble, go to your lawyer, where there's client confidentiality. That makes sense. So I don't have a problem so long as you understand your relationship with your accountants, and so long as you understand your relationship with your lawyer. And don't go and ask a lawyer how to structure your business to save taxes. Most of them don't know, even tax lawyers. That's not what they're there for. They're there to keep you out of trouble on points of law. And they're not, and generally, are not experts in business. You will get more business information from your accountant than you will from the tax lawyer. So understand the relationship. It's important, and it is your right to know that. It's also a good idea not to spend more money than you should as you move along. Don't go out and spend a massive amount of money getting systems in place to handle all this wonderful business you're going to have that you don't even know if you're going to be successful. The nicest problem in the world is orders are coming in, checks are coming in, and you don't have a system in place to support it. And you're going nuts, and you're trying to get people to help. Fill orders, look after details, answer the phone. Jeez, that's the problems you want. And you know what? There's so many people who will willingly help you with that. Just on a moment's notice, you can get people who will come and help. If you're in difficulty running your business and you place an ad in the Globe and Mail, Toronto Star, help, my business has gone bananas. I've got so much business I can't handle it. I need accountants, I need lawyers, I need workers, I need this. They will line up from here to Timmins. So don't think that you have to organize everything. There are people who would willingly work. One thing about Canadians, they're not afraid to work. Canadians, however, are afraid to blow their own horns. Canadians are afraid to say, I'm an expert. They need that piece of paper to hang on the wall. Certified general accountant. I'm a lawyer. I'm a doctor. They need that because otherwise nobody will believe they're an expert, because they sure as heck can't say so. Can you imagine saying, geez, I'm really good at what I do. And then their customer says, where's your piece of paper to prove it? You say, there, I graduated 25 years ago. I must be good. You know? You could have been in a coma for 25 years and the degree is still good. You are the ultimate judge if you're any good. So Canadians make the finest engineers in the world. Germans used to, but they sent us all their Germans and now they're Canadians, so that really helps us a lot. The finest engineers, actually, not just Germany, from around the world come to Canada. And so we're the melting pot of engineers. Americans love Canadians. The Americans say, go into partnerships with a Canadian. They'll engineer it, they will design it, they will market it, and we'll just go do it. And we'll make money. Canadians have a problem blowing their own horn. I mean, they will let the Americans think they invented lacrosse. They let the Americans think they invented hockey, curling, telephone, the Canada Arm. And now I just heard in the news that rescue that the Canadians made with those 6 hostages was engineered by the CIA. The Canadians couldn't have done it. I mean, it's Canadian people. They go out and they risk their lives to save lives because that's the way Canadians are. It doesn't matter what country they're in. Couldn't have been Canadians that would do that. It's the CIA. And you know what? Canadians will say, well, you shouldn't say things like that. That's not nice. Can you imagine if you put up a sign that said, we're better than the Americans at anything? How upset that they would get? And, you know, the Americans will stick their head in the sand. There was an interesting email thing going around on the internet recently. It was the 10 best things about various countries. And I'm not, this isn't a shot at the Americans, it's just funny because I love the Americans. They're our brothers and sisters and they're right across the border. But it said, reason number 1 that Canadians are the best in the world is they're the only country that burned down the White House. Reason number 2 is something else. Reason number 3, the only country that burned down the White House, and it went every other number all the way down to 10. The Americans won't even acknowledge that the Canadians beat them in the War of 1812. Can you imagine the Americans not making a notable history event of winning a war? The average Canadian doesn't even know that Canada and the United States went to war and the Americans lost. You know, we beat the tar out of them, burned down the White House, created absolute havoc, embarrassed the hell out of them, and how many Canadians know that? It's I'm getting a whole bunch of, I didn't know that from the audience. It's a well-kept secret. Go down to Niagara-on-the-Lake, where the major battle was, and they know it. It's written there. They burned down the Prince Charles Hotel, them damn Yankees. How dare they do that? We went and burned down the bloody White House. So, I don't know all the intimate details of the war, but anyway, it was a... And the interesting thing was, too, they thought the Canadians were, I guess, frozen asleep, and they thought they were doing this big sneak attack, and the Canadians weren't asleep, and it was rather disastrous for them. So anyway, coming back to the point, the Canadians are wonderful people, they're hardworking, they're enterprising, and it's been to their own detriment because we've let the Americans take credit for just about everything that we've done. And we've let them be the best of everything. Just one last comment. Could you imagine if the Americans were in one of the largest countries in the world? By the way, you can put Texas into Ontario twice and all of Europe 4 times. Can you imagine if the Americans... Hear what they say about Texas. I mean, drop it in Ontario twice, never mind Canada. But Canadians, do they make a big deal about the size and magnitude of our country? And do they make a big deal about the ingenuity that has a coast-to-coast railway, modern communications, and one of the largest countries in the world with 28 million people? I mean, there's little islands that if there was a hiccup, they'd sink into the ocean with more than 28 million people. Well, I'm talking about a feat. And then we let this government, which actually I don't want to take total shots at the government. They have done some good things to make this possible. So, coming back, be a Canadian and don't be afraid not to be pushed around. Don't get into the concept that if you stand up for your rights, somehow, some terrible thing is going to happen to you. So, a matter of fact, it can be more fun than you can possibly imagine to stand up for yourself. You can drive the tax department crazy. And we're going to get into some of the things that you can do to drive the tax department crazy. And it all begins with taking your power. Taking your power of being a business. Taking your power that says, I have a reasonable expectation of making a profit. Now, one of the things I want to do is to bring things into perspective before we move into how to have fun with the tax department, is realizing how the tax department will attack you and try to take away your deductions. Multi-level marketing, also known as direct marketing, indirect marketing, interactive marketing, Amway, Nikon, On and on and on are the names that people know marketing by. That particular area is a infancy industry. It lacks maturity. It has an abysmal rate of success. It is a real business and will mature and is going to be around for a long time. Do you know that at one point they tried to pass a law against franchising? Because everybody considered it a sleaze. MLM is still working to go past that. I'm not in MLM, I'm not trying to recruit you, I'm just telling you the way it is. Now, so if you look at it and say, here's how MLM works. Over 90% of the companies incorporated to be in multi-level marketing fail within 18 months. 93% of the people who get in multi-level marketing fail in their first year. 7% of the people make money, 2% of them make a lot of money. It is not true that there are more millionaires made in multi-level marketing than in any other industry. It is not true that MLM is being taught at Harvard University. However, it is true that it is a legitimate business. It is true that it has the best write-offs of any industry. And the write-offs go that you are expected to market to your warm market. And if you have multi-level marketing as part of your package as a business, now all of a sudden you get to take your wife out, your husband out, try to get them into the business. You buy them wine, you buy them dinner, you entertain them, you buy them promotional items, all kinds of stuff because they're your legitimate prospects. But you better, in your business plan, identify that statistically people fail, and here's how you're different. This is what the successful people do. And you do the things that successful people do, then they cannot take the argument that you don't have a reasonable expectation of making a profit. Fact number one, people make money in MLM. Fact number two, there must be something they do. Fact number three, this is what they do. Fact number four, I'm doing it. Legitimizes my business, legitimizes my deductions. And realize that the tax department is going to go after multi-level marketing companies like you wouldn't believe to collect unpaid taxes. So if you're an MLM and you don't have a business plan and you haven't identified what it is that successful people do, you're going to lose your deductions. Period. Without any shadow of a doubt. You get audited without a business plan that defines how you're going to make a profit, you will lose your deductions. That's cast in stone. Unless you're showing a profit, which is absolute proof you're a business. Because you either are a business or you're not a business. If you're not a business, then this must not be income, and you must not have to pay taxes on it. So if it's a business, it must be one. And with that concept goes your tax return. The one I said that don't fill in, that single tax return that comes to you in the mail, it's your T1, never fill that form in. It's designed to collect the maximum amount of taxes. It's an unfair form. It is misleading. And the reason it's unfair and misleading is where it says any other income, it doesn't say or losses or business expenses. In that box that says, do you have offshore wealth over $100,000? There is no law at this point on the books that says you have to fill that in, that you have to declare your income, because that didn't pass. Because the people from Hong Kong said, if you do that to us, we'll do to you what we did to Hong Kong. And that's that we'll pick up and move the hell out of here. Because our money is our money. It's our own personal assets, and we don't want to have to declare it to you because you're just going to want it. So when they start putting forms in there, relying on the good nature of the Canadians to fill in something where they have no right to ask that, and you have no obligation to fill it in, they should say right underneath it, this is purely voluntary. If you wish to fill this in, that's your choice. But you think because it's there you have to fill it in. What I would suggest is, on that form, send them a covering letter and say, please send me a copy from the Income Tax Act of where the information is that I have to declare this information. Failing to do so will be construed as I don't have to do it, and send it by registered mail. Be rather interesting to see what would happen there. So again, the form you're going to fill out, you're going to be a small business with the business plan, will be a small business tax return. And every accountant is fully familiar with it. The full version of CanTax has it as standard procedure in there. Your accountant just enters the information, and you're better off to pay your accountant to do it than you are to buy the program. We'll print out an appropriate business form that shows you and your deductions and everything else. And just before we go to break and have fun with the tax department, what I want to do is to give you how much money can you save? I've done a lot of investigation into the tax department. And one of the things that I have found out is the rules of thumb that trigger audits, trigger questions, and whatever. And just in case there are one of those people out there that says, how can you use this expression, rule of thumb? Does anybody know where that expression came from? It has something to do with the width of the strap that you could beat your wife with, legally. I don't subscribe to violence at all, so when I use rule of thumb, it's not meant to be an insult to the female gender or the male gender who gets beaten by the female gender or any type of violence whatsoever. I just say, well, for me, what it meant is there's a set of architectural drawings. They're 3 thumbs thick, so therefore it's a $300,000 project. That's a rule of thumb to me. But I was chastised severely. How dare you put down rule of thumb? Do you realize what that means? No, I don't know what that means. What does it mean? It means the width of the strap you can beat women with. Oh my God. So anyway, I'm not taking a shot at the genders with the rule of thumb. Find it interesting. So the rule of thumbs of the tax department go like this. How much of a person's home can they write off before the tax department will get stiff about it and perhaps go and inspect it? It's 25%.
Did you say home or phone?
Home, thank you for that clarification. The question was home or phone. So you can write off 25% of your home, calculated by one of 2 methods. Method number 1, the number of total rooms over the rooms for business. Method number 2, square footage of the home versus square footage used for business. Whichever one is in your favor, use it. And if the rule of thumb is 25%, then another rule of thumb is if you're in Toronto, you're either going to pay $1,000 a month rent or $1,000 a month mortgage interest to be average. That's what you're going to pay. Pretty hard to get a decent place for less than $1,000 a month. That means you can rent off 25% of your rent or mortgage interest. 25% of $1,000 is $250. $250 per month times 12 months is $3,000. So just from your home, you can write off $3,000. How much money do you have to make to put $3,000 disposable money in your pocket? You have to earn between $4,000 and $6,000. So you start saying, well, wait a minute. You mean if I have to earn $6,000 but $3,000 of disposable income, that's just the rent? Holy mackerel, is there anything else? And the answer is, yes, there is. Yes, there's a lot. You know that magic thing that happens at the end of the month where you say, I made this much money, I spent this much money, where did the rest go? It went up in taxes. That's where it went. So in order to change that around, you want to start utilizing this information to start putting that money back in your pocket. Now, if we're talking from $1,000 to $3,000 more left in your pocket after you've paid your rent, David, could you use an extra $1,000 to $3,000 right now?
Yeah, I think so.
Yeah, me too. And if somebody said, pardon me, spare $1,000, need a cup of coffee? I think it's a lot of money. So let's keep things into perspective. And as a business, the world of tax deductions skyrocket. Vacations and all kinds of stuff, which we'll talk about. So the parting thought before break is this, that this is all well and good, but if the tax department calls and says, Marty, you can't do that, it's not a deduction, and you roll over and get your feathers plucked, the whole exercise was useless. So you have to know your rights. And you have to know how to make it so difficult to pluck your feathers that they'll go find the geese who don't hiss and can get their feathers from there. So let's take a break. Welcome back. So as we're saying, let's have some fun with the tax department. Let's kind of know what it's all about. Let's talk about what triggers an audit. Here's what triggers an audit. mathematical errors. Is that ever done? Your job is to get your tax return to go through the tax department, burp out the other end, and send you a check. The way to make that not happen is make a mistake. So don't make a mistake. Here's a little reason why you may want to consider having an accountant's stamp on your tax return. Even if you do all the work yourself and go and you say, how much will you charge to review it? Because the tax department views a signed by an accountant tax return as you've already been hosed. They don't need to do it anymore. They've already made sure that you haven't tried to take any deductions that you shouldn't, and that it's properly done. Because that's what their job is, to make sure it's properly done. The translation of how that happens is up to you. I have been told, I cannot support this as gospel fact because this is hearsay from a tax auditor. It was one of my inside sources. Depends on your last name. If you have the wrong last name, you're more likely to trigger an audit because there's certain last names they believe misrepresent certain types of information. Now, having looked around here, I don't see anybody who's visually in those groups. Who's visually? No, go ahead. What's your question?
Yeah. Well, I've had 2 audits. My last name's McVeigh.
Oh, they go after the McVeighs, do they now? What is it about McVeighs? Add a new list. McVeighs get...
Just says the bombing. The bombers.
I see. There you go. Yeah, so they do, certain groups of people, they will go and confirm that they actually have that many children. So, yeah. And if you pay $5,000 less in taxes in any one year than you did in the previous years, the computer stops. Computers have fuzzy logic. And it says, oh, bang, stop, do you want to look at this? Well, considering a couple of factors. One, depends how much money is involved, how busy they are. How many tax auditors who haven't had a raise in 5 years left and went to private enterprise that month? Okay, we're short-staffed, we can't afford to do that. However, but because you've been blipped, you've been identified, and you are up for a possible tax return. Now, here's another piece of information. I can't prove this either, but I suspect it's true. Don't file your tax return on time. Wait a month when they've already picked who they're going to audit, and they don't have time for anybody else. Neat little stuff. And if you write in that box, I have more than $100,000 worth of assets offshore, that's a good reason to audit you. And you ever hear that list? Of that list, the blacklist, the tax department. For 5 years they're going to harass you because you're on the list. Do they have a list? 2 lists. List number 1. The goose who rolls over and doesn't hiss and gets their feathers plucked. A mere phone call. Sally, what is this? Ah, how much you want? and then there's the list. Sally, what do you want? I'm really busy. Make it precise, make it short, make sure you say absolutely the truth, nothing but the truth, so help you God, and by the way, I'm recording this phone call. Do you have a problem with that? That's the list where they leave you alone, because you're a pain in the butt. You're not easy pluckings. The tax department, I believe, can't prove, has quota. Auditors, I believe, can't prove, have a quota. I've heard things like, if they don't collect $100,000 a year in unpaid taxes, they don't get to be a tax auditor. They can stop being one. And I've heard that the average auditor expects to go into a small business and pick up $2,500 worth of unpaid taxes from small business. And I've heard that some auditors will accept this proposal. I'm really busy. I don't have time for this audit. I believe you expect to get $2,500. I don't think I owe it, but it's not worth it to me to put up with the audit, so how about I just write the Receiver General a check for $2,500 and you leave? I've heard that they would accept that and do it. And there's no law against, not bribery. You're offering to pay a fixed amount of tax. An auditor has the power to negotiate, has the power to overlook, has the power to forgive. End of story. Tax auditors are not tax experts. They are not. If they were a tax expert, they would be a tax officer. You're more likely to find a tax officer who's an expert, if such a thing exists. Personally, I don't believe there's such a thing as a tax expert. I believe that there are people who have expertise in certain areas of tax. For instance, I am the world's foremost expert on taxes, as it applies to GST, as it applies to groceries, as it applies to ice cream, specifically narrowing it down to ice cream novelties. There's no one in the world knows as much as I do about that, so I'm a tax expert. But if you were to say, am I an expert on 2,763 pages of Bill C-162, the Income Tax Act, I'd say I don't know of anybody who is. So, knowing that brings out an interesting thing to wonder about the tax department. That interesting thing is, who should be afraid? Let's talk about fear. 4 fears in the world. Fear of pain. If you don't have the fear of pain, get it. It's a really good one. It stops people from running in front of buses, picking fights with people bigger and tougher than you are, picking a fight with your spouse when he or she can be devastating in battle. Phobias. The way to overcome a phobia is hypnotherapy and face your fears. 5 minutes later, the fear of heights is conquered. I did the dumb thing, the high ropes, died a million deaths, and then find out that somebody could do it, could have done it for me in 5 minutes painlessly. I could have walked across a bridge and had the same effect. However, too soon old, too late wise, something like that. Phobia, yeah, that's it. So that leaves us two fears. The third fear is the fear of rejection. You know, if the tax department rejected me, I'd never be able to sleep at night. Can you imagine them saying, I never want to speak to you again, you rotten slime bucket? That would be really bad. I would go and kill myself over that one. I've been rejected by the tax department. For final fear, the fear of the unknown. That fear that says, I don't know. You want to threaten somebody? Never threaten with what you're going to do. Threaten them with, I'll exercise my options. And whatever their fear is will go right to their mind. They'll conjure up the worst case. Oh my God, he's not going to do that. I'll be good. It's like identifying what somebody can do but you don't know how. What I was told how to survive Mortal Kombat with somebody who's physically larger than me, faster and tougher, is to look them in the eye and say, I don't doubt that you can beat me. I also don't doubt that before you do, you will be blind in at least one eye. And they'll be wondering, how is he going to do that? The fear of the unknown will manifest itself. I don't know how he's going to do it, but I need both of them. So, with the tax department, let's talk about that. What have you got to be afraid of with the tax department? It's audit time. What? How does an audit start anyway? Let's see, the black horses, black robes, right in the middle of the night, pound your door down, kick it open, steal your computer, and find out you've got stuff on there that shouldn't be there. Oh my God. What it works is they phone you and they say, something seems to be out of order, could you please explain it? And you say, it's a legitimate business deduction. On page 34 of my business plan clearly outlines that how and why it's necessary for me to have a health club membership, why it's necessary to have it in my business, and how I use it for marketing and how I write it off. Health club memberships are write-off, 50% for personal use because you're working 80 hours a day, and the other part is because you market there. And I'll get back to that. So, you satisfy them, you have a business plan, you're not easy plucking, and they will probably go away. But if they don't go away and they say, well, we're going to have to come and audit, you have a choice. You can have your books audited at an accountant's office or other neutral territory or at your place of business. Your choice. And you have the right to make the appointment at your convenience. They cannot dictate to you when they're coming. You just say, sir, I won't be there. You'll have to come on April 15th at 8 a.m. and you will have to leave at 3:30. Between those hours, you will be able to audit my books. And those rights are in writing. So let's consider the process. You stand to lose $2,500 bucks. That's what the auditor expects to get from you. Compare that fear. of losing $2,500, would you kill yourself? I don't think so. Would you lose a night's sleep? Maybe. However, let's look at the auditor. What have they got to lose? What happens when you work for the government and you screw up? You're out of there. What happens if you end up in court over $99, another rule of thumb, and you're explaining to your superior, I believe it's worth spending $30,000 to get 99, because we have to teach them a lesson. I don't think so. I think they'd be looking for a job. It's like the boll weevil, gotta find a job. So here's the balance. You've got $2,500 on the line. They've got their job on the line. Who should be intimidated? So what do? You go out and you buy a copy of the Income Tax Act. And you put it on the corner of your desk. What do you think they're going to think when they see that book there? It's $60 to purchase it at CCH, Canadian Clearinghouse. Or I don't think they call it the Queen's Printer anymore. There's another one. But anyway, now you can buy that book. As a matter of fact, I would discount a used one that's out of date that's just as intimidating for 50%. And you will put a tape recorder right beside the Income Tax Act. And now they're coming in there and they don't know why you've got that there. And if they say, why is that? Well, why do you have a copy of the Income Tax Act? You say, are you here to audit or are you here to chat? I'm sure you're a nice person, but I would like you to get the audit over. Please get started. And you say, by the way, I'll be recording this. You don't mind, do you? I want to make sure that whatever I've told you, I have a record of, and I want to make sure that I understood the questions clearly. And I may need to go back. So any questions you have, you just make sure you speak to me in the ear. And now, can you imagine this? They don't want bad publicity. And this person has probably never opened that book. And do you know that you have the right to show them the book and say where there is that information? And there's all kinds of things that you have the right to do, and that the tax department, I believe this is purely an opinion, does this to outfox you. Every year they send you a list of your rights, and you a list of your rights, and you, and everyone here gets in the mail annually your rights from the tax department, telling you that you have the right to do this, telling you that you have the right to be presumed honest, to be presumed innocent until proven otherwise. And which contradicts, this is the neat little thing, the tax department tells the accountants, tell your clients that a tax court is different. In a tax court, you are assumed guilty unless proven innocent. That's what makes it different. Now, that the implication there is that other courts assume you're innocent until proven guilty. So when you're on trial and the prosecuting attorney, the Crown Attorney says, I believe this person is innocent. I think the information has to be looked at to consider the contrary, but he's a fine, upstanding citizen, and I highly doubt that he would do anything dishonest. Now, it's the defendant who says that. It isn't any different in a tax court. The tax court is going to say, do you have receipts to support those deductions? How is that different than an employee with an expense account who submits an account for $2,000 expenses for that month? Isn't the boss going to say, do you have supporting evidence? You know, a tax court is not, like, as much as I dislike a lot of things about the law, I do like the fact that they're saying, let's examine the facts and figure out the truth. That's what court's about. So when someone suggests to you that a tax court is a kangaroo court, I suggest that's misleading, that's misinformation. So, does anybody identify the name of the document that's sent to you annually that has your rights on it? Think about it while I'm telling you what it says. It says you have the rights to an impartial examination of your records. It says you have the right to withhold disputed amounts. It says you have the right to be presumed innocent. You have the right to be treated with fairness, with respect. You have the right to ask questions, ask where the information comes from, etc., etc. Anybody want to volunteer?
Is that the Constitution?
It reflects some of the things in the Constitution. It's on a substantial sized document. It's on the back page facing outward, not inside. You don't have to look in the document to find it. Big, bold type, almost the full page, the back page of the document they send to you annually. Bingo. Your income tax package that says, here's your T1 general, here's what you have to do. A couple of years ago, decided that I should reread it to see if anything's changed. And I pick it up and I look in the back, and this is what I've been telling people and nobody believes me. So if you were to argue with the tax department that it's misinformation, disinformation, they'd say, how can you say that? What could we send to you? They know damn well no one's going to read it. Is this your favorite document? Ah, look, a letter from the tax department. How sweet, how thoughtful. I get a chance to send them some money. I'm so happy. Let me see, I'm going to read the document from front to back. It's so nice. And I'll send them a nice covering letter in calligraphy and handwriting to show how touched I am that they sent this to me. So now you've got into this process, the auditor's there. The audit is a stupidity test. It's not an intelligence test. People think it's an intelligence test. They think they're supposed to sound like they know what they're doing, have good, sensible answers, and if in doubt, guess. Make a good guess. They want to know, are you dumb enough to guess? And then they will use that against you. And they will try to drag you into conversations. Gee, that's a nice looking boat in that picture. Is that your boat? Oh, do you travel? All this kind of stuff. You just say, I'm sure you're a nice person. Love to be your friend, not so long as you're a tax auditor. Get the audit done and leave as soon as you can. You cannot obstruct an audit. You have to cooperate. You have to have a reasonable set of books. However, the law doesn't say what is a reasonable set of books. A reasonable set of books is paper trail that shows how you do your business. How much money did you deposit? How much did you spend? For what? Accounts receivable, accounts payable, your books, your checks, your stubs. That's adequate. And a shoebox full of receipts with tally tapes. That'll do. And your tax year is not divided into 12. They don't care whether you spent it in May or June. Just how much did you spend this year? So you don't really have to worry about your monthly reports. That's for you to run your own business. If the tax department says, you can't write that off, step number one, say hold it aside. Step number two, get them to show you where in the Income Tax Act it says you can't. And then when they can't show you, as many of the cases they can't, you say, turn to Section 8. I think it's, I'm not sure, the page number 233, the chapter number 233 or whatever, which says any reasonable business expense can be written off. Explain to me how this is not a reasonable business expense. And don't remove anything that they say you can't deduct. Hold it aside for negotiating at the end. And you say, let's divide the pile in half. I'll pay half. How's that? They have the right to do that. And you have the right to go to court. So let's assume the audit's over and they say, you owe $2,500. Does that mean that you owe $2,500? No, it means the auditor's opinion is you owe $2,500. And they will assess you for $2,500. What is an assessment? An assessment is a verified, added up balance. Yes, you owe it. That's our opinion. Just like the auditor's opinion. It doesn't mean you have to pay it unless you don't have the knowledge to know that you have to file a notice of objection. Which then that document in the back of your T1 General says you have the right to withhold, you have the right to file a notice of objection. In Toronto, you would go down to Young and Shepherd, and you'd pick up a simple form that says, what is the reason you're objecting? And you cannot use, well, I plan to make a loss next year, so I want to hold it against my taxes this year. That's not a reasonable reason to object. And you fill out that form, so long as they have it within 90 days. Now it goes back to the tax department. And they have to consider, A, is this a can of worms? If we fight this battle and lose, what are the repercussions? What if someone says, I don't have to pay because you don't have jurisdiction? That's a mega can of worms, because they don't. The federal government does not have jurisdiction to collect taxes. Interesting, isn't it? But I'm not saying not to pay because of that reason, but that would be a can of worms, big time for them. And then they would be starting to say, who is this person? What do they know? How do we resolve this issue? What's the best way of handling this? Doesn't mean they would back off. Depends. Right now, the inside sources in Revenue Canada tell me that as soon as a taxpayer, and this of course is if you're under $100,000 a year, because there's a magic thing happens over $100,000, you're more desirable. There's more money to get from you. So if you're under $100,000 and you file a notice of objection, the odds are right now that's the end of it. You won't pay the tax. It'll never go further than that because of human resource capability to handle it. That's the existing status quo. Right now, what they want to do is nail the underground economy. And construction industry is a major one of those. I think that they should spend 2% of the amount of money and just restructure it, make them 1 to 5. Because if you really look at rule of life, does it make sense to get into a battle you can't win? What if the taxpayers of this country said, screw you, we're sick of this. We're not filing our returns anymore. All of us. What would they do? Who is the government anyway? Us. So all it would do would be to take the collective power of the country. So don't start a war with the people of Canada unless you want to lose it. You make peace. A little bit of history in the history of Canada. Way back in the Stone Age, the Cree Indians, in those days they called themselves Indians because Columbus didn't know the difference between an Indian and an Aboriginal, got in a fight in Alberta at a river. And there was a lot of people killed and slaughtered, and they called that the First Battle River. And then they got in another fight, and there was more people died at a different river, and they called it the Second Battle River. And then they regrouped, and they had another fight at another river called the Third Battle River, and more people died. Then they got together at the Fourth River, and they decided, this is really stupid. I'm losing brothers and sisters and friends and relatives, and we're not getting anywhere. Why don't we make peace? And they did, and they called it the Peace River. A little bit of Canadian history, again, not taught in Canada. I have one of the arrowheads from the Third Battle River. The tax department right now needs to meet at the Peace River and make peace with us. Because I can tell you, people are hostile. They have pushed it too far. And they're starting to do things now that are getting damn well irritating. This death tax stuff where you can't leave stuff to your kids, that's annoying. And they've gone too far. It's a really good time to make peace. And it's not just me, I'm just speaking for what I've heard from thousands of people telling me this, at many seminars and this. I know that's the feeling right now. So, you file your notice of objection, probably goes into nowhere land. If it doesn't go into nowhere land, then they will rule. Big ruling. Comes on a beautiful piece of paper, literally gilt-edged, gold, crown and anchor, official looking, signed, sealed, and delivered. You owe it. We've ruled. What that means is they have ruled that their opinion is correct. If you file a notice of objection within 30 days, it reduces that just to another opinion. They go back to the can of worms. Is this a big can of worms? It's a can of worms. Let's resort to Plan B, trickery. Ariel, this is Dan from the tax department. I'm worried about you. I'm concerned. You know this amount that's in dispute? The clock's ticking, Ariel. Penalties, interest, bonus. Ariel, I'm worried. If there were a way that you wouldn't have to pay the penalties and interest, would you want to know? Yes. Okay, well, here's what you do. You pay us the amount in dispute, and then, if you're right, we'll give it back to you. All you have to do is take us to court and sue us. So would you like to pay us now? They don't tell you that last little part. Yeah, 50% of Canadians at that point buckle. That's not the time to buckle. They're just testing the waters. That's like the little guy going, poke, 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 just try it. And then you say, all right, okay, I'm sorry. They're doing the poke, poke, poke thing. So now, how do you know when the tax department is serious? when you receive a summons to court. That's, oh, geez, they're serious. I guess I better pay it. You call them up and you say, I've been thinking about that offer you made me, and I've decided to take it. And then if they say, plus penalty, plus bonus, say no. I will pay my taxes now and send you a check or a group of post-dated checks, because I have the right to do that. And you have to accept that. And if they say, no, we don't, then you say, I want you to put that in writing. Why? Please send me one of your gilt-edged letters saying why you will not allow me to pay my taxes. And I will also send you a letter acknowledging to who I spoke to, your department, your manager's name, copy to the manager, copy to the Prime Minister of the country, copy to the Toronto Star, copy to the Globe and Mail, copy to 530 Live, City TV, Lunchtime TV, Breakfast TV, about why you won't let me pay my damn taxes. Can you imagine them saying, no, sorry, you can't pay your taxes unless you pay penalties and bonus? They have the right to say that, but what are the odds? And then it would be really interesting. There you are in court. Your Honor, I have been trying to pay my taxes. They won't accept it. They would rather drag me into court, take penalties and bonus, than collect the money that's fair and reasonable. I'm not arguing about that. I just want to pay my taxes, and I don't think I should be penalized. What's the judge going to say? I don't know, but it's an interesting thought process, isn't it? Kind of interesting. So it is a judge, a fair and reasonable judge, under the laws of this country, doing the best they can to implement due process of law that counts. So when you look at it and you say, hey, if I've got all these rights, why should I be kept up awake at night worrying about a tax audit? Why should I worry about it? Well, be a good record keeper, be a good bookkeeper, and there's no reason to lose a lot of sleep. Odds are you'll never get audited anyway. And if you do, you probably lose $2,500 a year. And you can make payments, and you can make restitution. And they can illegally go, if you don't do the notice of objection, if you don't appeal, and you don't comply with their demand for payment, they can go in and seize your bank account. Not legally. You have no contract with the bank that allows the bank to contract with a third party to give your money. That's a violation of your contract. However, I wouldn't want to guess how much it would cost to try to win that one. The little guy doesn't finish first in a legal battle with a bank or with the tax department. So they will seize your bank account. Little rules of thumb, though, I've heard if you're worried about it, make sure that somebody else owns everything that you own so that they have nothing to take from you. Give it all up, but not for the purpose of escaping a debt. It has to have been done before. So you do things before this happens. You don't do it afterwards. Pre-planning is what counts. A lot of people will move offshore to protect themselves from stuff like that.